you know what? I think you went too early on your celebration. And I think that happened.
Teaser. That's why I only did the teaser, you know, just
the stock market gods did not agree with you.
They did not.
They're like, look here.
You ain't gonna catch me celebrating early.
But we are live. I wonder again who's gonna be the first person. I'm always excited to see who the first person is. Jonice. Hey Jonice, what's good? All right. Good evening, everyone. Good evening.
Hey y'all.
Everybody's looking down at their phones. We are such millennials. It's like when people used to go to restaurants, I guarantee you after COVID-19, ain't nobody gonna have their cell phone out. They're gonna be so engaged on conversation to find out, yo, what's going on with you, and tell me every single thing that I potentially missed. And I think that's gonna happen for about a month and a half. And then after that month and a half, everything starts to creep back to normal, where you start seeing people sitting at restaurants on their phone, looking down.
But I'm actually working though.
Yeah, I'm writing in my notebook. So
I was posting to other pages.
Okay.
So I'm actually working. Like, I'm not just in my phone for no reason.
What's up, everybody? How are each and every single one of you doing today? Wow, it's Thursday. It's so fast. Like, this week went by super fast. Can you believe it?
I mean, I can. I'm starting to get used to this triple speed, you know? I'm getting used to it.
All right, so you know how we do it in typical format and formation. Go ahead and tell us where you're coming from. We definitely want to know. I think the furthest that we've seen is Japan and Africa.
Where in Africa, though?
Yeah, if you're here from Africa, I'm not seeing Mark. I'm not used to seeing Mark without a hat. You know what? I can go back, but, you know, I did, you know, have a haircut for a minute, so I felt like I should at least show off the do. We got Charlotte, North Carolina in the building. Oh, wow. People are hating on the Patriots hat, of course.
That's hilarious.
Come on, y'all. ATL in the building, Oklahoma City.
Okay.
Y'all, just as a heads up, I know you guys haven't seen it, but I have. The shirts that are coming.
That merch. Shout out to Matt Reese, head of merch.
And then definitely our design team for definitely doing it right. There are some goodies. Now, for anybody that watches the come up, just for your own, you know, understanding, I typically sometimes talk in code. So there's like many times a gym within a gym within a gym. There's layers to this. So sometimes when you go back and rewatch the video, it's like, it's very interesting that I'm always getting messages from each and every single one of you saying, hey, I learned this. I can't believe it that I missed that part. Or, hey, now that I've gotten further in my journey, I'm seeing this completely different. That's a good thing. So just know that we keep hitting gems within our conversations and then within our teachings. Right, y'all? Oh, wow, they are over there in deep thought. So that lets you know that they are straight up coming for me today, like with vengeance.
What? First of all, we be over here chilling, minding our own business, reading the news, okay?
Oh.
No one's coming.
Reading the news, but though they said earlier that they were taking notes and everything else.
Well, we have a pre-production meeting. Hello.
Yeah, you know.
That I wasn't. Keep in mind, they have a pre-production meeting on Thursdays that I'm not invited to. But I guess since we're at it, though, we should definitely mention, since we are seeing people show up in the super chat, we should let them know where their capital is going this week.
Yes. Let me just pull that up right here.
Well, I take
All right, y'all. Okay, so this week's from Tuesday and Thursday lives, your super chat donations are going to Live to See Cancer Cured. You can go to livetoseecancercured.org, and that's live, the number 2, the letter C, cancercured.org. And let me give you a little bit of background. Cameron Washington and his aunt Linya Segura created the Live to See Cancer Cured Foundation to provide support for and champion for kids with cancer by creating a new normal, inspiring them to fight hard despite the expiration date given to them by their doctors. They strongly believe that helping kids create a new perspective is the best way to help them become survivors that grow up paying it forward by helping other kids live their best life after cancer and establish their new normal. We are super excited to be able to donate your super chat dollars over to this wonderful organization. So thank you in advance.
Right, and it's pretty cool because I actually was doing a After the Come Up show on IG Live, and guess who showed up on the live with me?
Was Cameron there?
It was Cameron.
All right.
It was super duper cool. So we got to meet each other. We got to talk. I said, you know, whenever the time comes where we can get you on the show, definitely want to do that so that we can talk a little bit more about it. And, you know, got to share my story because for those that don't know, I was also staged with Hodgkin's lymphoma stage 2 back in 2011. I'm definitely cancer free, living healthy. But I mean, when I heard about their cause and which that we were doing, you know, it definitely, you know, had me asking who's chopping onions. But, you know, this is a super duper dope cause. So shout outs to Cameron. Shout outs to you, brother, and your auntie. Hey, auntie. All right. So it is 5:04.
Yes.
What's good, everybody? Shout outs to each and every single one of you. We thank you for showing us the love. If you haven't subscribed yet, I mean, you know, please do, because we do post up some pretty dope content and we'll continue to keep doing that. If you like the video, even today's live or any of the other videos, please go ahead and hit the like button. If you didn't like it, I mean, that's okay. I mean, but at least you're here and learning something. But please be able to tell us what is it that we can do better, because we always want to get better in providing you great data. And on top of that, if you want to be a part of the notification squad, go ahead and hit the bell. But today is Hot Take Thursday. I'm Mark Monroe. I'm accompanied by the wonderful JolynGC and Kamari Bright. And this is actually one of those days where I get to sit back, lean back in my chair, take sips,
Forward,
and answer questions while they try to stump me. Now, they've only been able to stump me once. So let's see if we can keep it rolling.
Back up, because when did this whole stumping thing even come up? I think
it was a 1600 question where I was stuck.
Well, I know that. I've had
okay.
That's in the archives, and where is that? But where did this whole culture of trying to stump?
Where did this objective come from?
Right.
Oh, well, I mean, technically it was Kamari who started it, but.
Dang, I don't remember that. I must not have been at that meeting.
I don't think I was there either.
She said she was like, and I quote, "We are going to get you."
I don't even sound like
So now I'm not the only one taking sips. All right, so without further ado, I pass it on to them. Let us begin.
Sound like me.
What's up, everyone? Good afternoon, good evening, wherever you are in the world. Hot Take Thursday is in full effect. All right, let's break it down. Let's talk about what happened. We have mixed results today in the market. So we have the Dow down by negative 80.12 points. S&P 500 almost touched that record high. It was about to close and it didn't. It just couldn't pull it together, but it was down by a little less than 7 points. And then the NASDAQ, the only green up in this piece, was up by 30.27 points as Mark pours his water. Then for the sector breakdown, let's see. So we have communication services coming at number 1, followed by tech. And then consumer discretionary was in the 3rd place. However, they still finished in the negative. And for the bottom feeders, we have industrials, real estate, and energy. One thing that we got to keep in mind is the sector rotation. So that's why we always talk about sector performance. So you all know, if you go back to past episodes, you can see who was at the top. Tech was always number 1 for a good while, and then it's starting to come back down. So let's get into our top picks. So for our pick performance, let's see, we got DraftKings again. Again, that's wild. We have Best Buy.
Shout outs to Troy.
And we
He's in that DraftKings trade.
Wait, who's Troy?
Troy from EYL.
Oh, okay.
Is in the DraftKings trade, and he is
right
like
now?
hoping or hoping that they report well on their earnings, which I think is tomorrow.
Oh my goodness. Well, good luck with that one, Troy. And then we got ARKG for the bottoms. SMH, K-Web, and Qualcomm.
You good?
Y'all. It's temporary. It's temporary. Calm down. It's
Did
temporary.
you guys just have an argument?
We did not have an argument. We did not have an argument. Don't call it that. Don't call it that. I'm not gonna put our business out in the streets. Okay.
Okay.
You mean that's me.
Just want to say it takes a village, so we're here for you if you need us.
I'm not gonna put SMH out on the street, y'all. Yeah, not yet. So we had some 52-week highs. We have Nvidia, Best Buy, XLY. Talk about that later. RTH and ARKK. We got people gunning for this base status now. Okay, this is wild.
I know. I'm seeing it in the comments right now. So they're like, "Yo, who's Bay?" You know.
SMH is Bay, y'all. I mean, it is.
Or no, they're saying who's like people are asking who's Side Bay because you know SMH must be angry right now. So
yeah, Ebony's saying it's time to pull outside Bay. Well, we definitely had some contenders today. I was like, dang, okay, I'm out here choosing. No, I'm just kidding. Let's get into some news, Kamari. What you got for us?
Okay, so let's kick it off with some federal news. So the Fed lowered the pricing for emergency loans for state and local governments. And I'm just wondering, what does that translate into for the market overall?
not really much. I mean, we pretty much knew that the Fed was going to be pretty much there whenever the market needed a steroid shot or whenever it ran out of gas, and it's just like, okay, hey, boom, here's your next shot of performance enhancements. And they pretty much have stuck to their word. They knew that this market was going to be in trouble and it's going to take a lot of recovery. I think the year is all the way to 2022 or 2023. So they're going to continuously keep trying to stimulate it and to keep it pretty much propped up. So no negative rates. And a vast portion of that is moving over into governmental side of state governments, state and local governments. And so, I mean, it makes sense. I mean, it's nothing that we didn't already expect. It's nothing that we didn't already see coming down the pipeline. We are printing a lot of money in order to make this happen, in order to keep states afloat. But I mean, you have to take into consideration, you have agricultural, you also have retail, you also have food and restaurants and stores. So, I mean, these things are major. These things are major economic contributors to states. I mean, and when you don't have those flourishing as they once used to, I mean, that takes away from taxes, that takes away from tax dollars, that goes into states and cities. I mean, you can kind of see the domino effect, or as ASAP Rocky used to say, slippery slope.
Yeah, so just thinking about like the recovery, like I know a lot of people are just really gunning for it to be such a fast recovery, but I think this kind of shows even more like it's gonna be a steady build.
Yeah, a lot of folks were thinking that we were going to have a V-shaped recovery. Now, we had a V-shaped recovery in the market, but when we look at the actual economy, there is no shape, any form or fashion that we saw a V-shaped recovery. This is more so going to be looking like an L that's tilted a little bit.
Yeah.
As if you're writing in cursive. But yeah, there's no V-shaped recovery for this economy. And I think that, you know, the world, I mean, well, not the world, but I mean, the United States knows that, and most of your economists know that. So, I mean, we're here. I mean, we've been in recession since February, but really, in reality, we've been heading towards recession since last year. And I think that we were just looking for a catalyst. And then what just ended up happening was COVID-19 just happened to be that catalyst that tipped us over into recession. But the signs were all there. We saw the inversion of the yield curves, which is pretty much I think it's the 3-year and the 10-year, I think it's like the 3 months and the 10-year, one of those. But we saw that inversion, and typically what they say is after you see that inversion, it typically takes between, in some cases, 9 months, but it can go all the way up to 18 months until you actually see the full-blown recession. And then on top of that, COVID-19 hit and it shut down everything. So, I mean, yeah, no V-shaped recovery for this economy.
Yeah. So I guess knowing, since we already know that recovery is going to be a slow build, and we know the market prices ahead as far as events, when will it price like second wave or the election? Like, are those things already pricing in? Or when
I think the second wave has already started to be priced in. I don't think it's fully priced in fully, but now I want to preface that for everybody that is asking, like, okay, hey, Mark, are we getting ready to drop 40% in the market? And I'm going to say, no, that's not going to happen. I think that what you will see happen, and especially if we're watching, like, for example, the earnings, you're starting to see that a lot of earnings are starting to get better. So, and then on top of that, I think the only thing that amplified this year was seeing that you had a lot of bad companies that were already struggling and that were teetering before COVID-19. And I think that with COVID-19, it only just amplified it even louder, just to show, like, okay, hey, it's like kind of like when the lights come on, all the roaches try to go to the dark. And that's literally what you're seeing in this market, where you're seeing a lot of the struggling companies, they try to run to the dark, except that they got exposed and they're being killed.
Yep. All right, that's all I got.
Sorry to consider, like, paint that vivid image of roaches.
I was like, okay.
I feel like the image gives it justice.
Shout out to Coach Head. What's up?
Yes. Shout out to Coach Head.
Dope episode on Tuesday.
One thing I wanted to point out is, I don't know who told me this. Somebody told me this. And ever since they told me this, like, this is how I think about the relationship between the economy and the stock market. Someone told me that the economy is like the human that walks the dog. You know, when you're in a park and the dog is just going all over the place. I don't know if that was a video someone posted. Mark, you may have posted it. I don't know. But anyway, ever since then, like, it has made me like really be able to conceptualize, like, how the market can be doing so great and then the economy sucks. It's because, when you're in a park, you're holding on to the dog is doing its own thing and the leash is still there. The dog is just,
trying to get somewhere.
Right. So, and usually the dog is ahead, right? So anyway, hope that helps you all. Okay, so we were talking about money and banks, so I want to segue into what happened with Softbank earlier this week. Go ahead, get your water, sip up, hydrate. All right, so as you know, Softbank is like an investment firm, right? And they lost some money, y'all. They really did. They lost a lot of money.
Some money? I mean, let's just call it for what it is. We ain't trying to take no deep breaths. They are bleeding. Like, they're like the person that just got, and then they're asking for everybody in the streets to help them.
Man. So let's talk about the impact of them, like where they're at now. Because today there was an article about them, coming back up or what have you, and that they had been buying up Apple and Amazon and Facebook. So talk a little bit more about how that's.
So I think I posted this earlier where we talked about SoftBank buying up significant shares of Apple. And interesting thing is that at the same time, they're selling off tons of assets. Like, SoftBank has been known to have a lot of investment assets. I mean, because as an investment firm, and they also had a fund where it was like over $3 or $30 billion worth of capital. Now, for anybody that doesn't understand, let's rewind a little bit so that way you can get caught up to the story. So many of you guys if you live in like cities, like large cities or metropolitan areas, you've heard of a place called WeWork. Now, one of the most major investors in WeWork was SoftBank. And then on top of that, one of their other major investments was, I think it was Uber. Well, let's just start off with Uber. Now, at the same token, SoftBank had to eat that cost when they had to remove Travis Kalanick, which was their CEO and co-founder and quote unquote visionary. I mean, don't get me wrong, Uber was a great company. But at the same token, it's like SoftBank had to eat a lot of that cost up front. Then let's move on to another company called WeWork, which they were drowning in debt because of the assets. And then on top of that, the amount of money that they were bringing in for the rental spaces was not even, it's like a fire festival. I guess the best way to say it for WeWork. And so they're now drowning in all this debt. And keep in mind, they were the largest investor. We're talking about billions of dollars that they had pumped into WeWork. And it failed. I mean, remember, we were supposed to be seeing WeWork go public for IPO. They literally like, yo, that show got canceled. So now they're sitting there having to hold the bag in all this debt. And when you're in investment banking or when you have a firm or a finance, you typically have to sell off assets in order to kind of like build up more liquidity and to make good. So that way, ultimately, you can kind of cover yourself. And that's what they're doing because they're hemorrhaging right now with tons of debt. And so they're selling off the assets, like, for example, its ARM division to a specific player that we may get into a little bit later. But they're selling off a division of their chip sector to another company. And it's funny because now they've been buying a lot of Apple shares because of the fact that if they buy into Apple and they know that retail investors are going to want to take part due to FOMO, fear of missing out, then ultimately their investment, they can get a nice bump in that investment, and then thus they can have some type of liquidity that comes back from those profits. I mean, you got to put it into perspective. So, I mean, I guess that's SoftBank. I want to see how the series finale plays out.
Yeah.
It's you, Kamari.
Oh, it's on you, Kamari.
It's on me. Okay. Let's see. Just some general things that have happened this week that I thought were funny. In the hearing, the antitrust hearing, Facebook and Microsoft really just threw Apple under the bus, and that tickled me. Related to the App Store, it was like, yeah. And then also we saw Berkshire buy back stock. You want to speak a little bit just about stock buyback and purpose, like what that signals?
I mean, typically when, like last year, 2019, the reason why 2019 was such a good year was because you had a lot of companies buying back stock. A lot of companies were like, kind of like, screw the dividend, let's buy back stock. Now, here's the interesting thing about buying back stock and why it's also a very dope tool that a lot of corporations use because of the fact that, for one, tax purposes, and then on top of that, you boost shareholder value. So that's the ultimate thing right there. So we even see companies like Apple buying back their stock. I think the interesting thing for Berkshire Hathaway is the fact that they realize, and they're value investors. So when they see that there's a huge opportunity, and of course their stock has taken a hit this year, I mean, why not buy back your own stock? Because then when you come back to a good year, then now the value of the stock is different. And say, for example, you can buy it, you can sell it off at a nice little premium. I mean, it makes sense there. Now, are there other indicators as it pertains to, like, hey, they may be light in other areas, like, for example, revenue? Because last time I checked, I think Berkshire Hathaway reported a significant loss in their most recent quarter. So sometimes they'll buy back stock to say, hey, guys, we know that we didn't have the greatest quarter, but hey, we'll buy back stock to kind of like ease your troubles. And I guess the whole thing about, companies throwing other companies underneath the bus, I mean, that's quite comical that they're trying to throw Apple underneath the bus when Apple hasn't even changed the price of its app store since the dawning of the app store. So
yeah, that really tickled me.
There's a lot of news about Apple, actually, speaking of app stores and things like that. So one, they kicked out Fortnite.
interesting.
Two, Apple is coming for, well, I don't think they were even really thinking about Peloton, honestly, but, Peloton stock dropped once this talk about Apple having a subscription services and for fitness. And so we've been talking about Apple and their valuation, right?
I have.
Some of the things that they've been up to. So
if anybody goes back to roll back the clock in some of our previous episodes, like some of the ancient episodes that we carried over, and I know that y'all come for us in the 360p video quality, but Don't knock us. It was Facebook that did that to us. But I remember saying that Apple is going to bundle its services because it makes sense instead of having, me having to pay for this service, this service, this service. Just put it all in one. And I think Disney Plus did it best with ESPN, Disney, and Hulu. So it only makes sense that Apple has said, okay, hey, we're going to do it. I think the second part is that the fact that, yeah, Peloton should be scared. Peloton should be scared because if you think about the amount of data that Apple has been able to gather from folks, like, let's put this into perspective, and I'll just leave it as a footnote question. How many of you guys wear one of these? Now, there's 635 people now watching.
Uh-huh.
Now imagine there's 355 or 366 million people in the United States. There's 1.7 billion people in China. There's 1.5 billion people in India. We haven't even talked about Europe. Now ask yourself this: how many of them are using an Apple Watch, and how much data has Apple been able to pick up there? And then on top of that, they've been doing Harvard studies. I mean, that's how they brought on, say, for example, the menstrual cycle thing within Apple Health. They brought in things as it pertains to picking up your financial records and data. And they've been acquiring quite a few companies within the fitness space. So
They coming.
Oh, kind of in that same vein, talking about Apple's App Store. So y'all boy, the president, was talking about the ban,
Hold on. Wait a minute. Like, wait. Where's the Dave Chappelle? I don't know this.
Was talking about the ban of Chinese companies. And so someone was bringing up the fact that WeChat is really popular among Apple users.
Yes.
In China, and they were saying that would account for like a dip in the App Store. So I'm wondering, like, what's the deal? What happened?
So that's huge. I mean, like, we're already seeing like a company like Huawei taking a huge hit, and they're like the #1 cell phone maker. They surpassed Samsung as of recently. I don't know about those numbers, whether or not they're legit or not, but I mean, we'll just say, for the sake of the conversation, we'll take you at your word for it. So that's interesting. And then, WeChat is highly used amongst Apple users. And on top of that, it definitely leads, they've actually found that the WeChat user base also leads to iPhone sales, which is very interesting. So if WeChat, say, for example, takes a hit, I don't know how big of a hit, because if you really want an Apple iPhone, I mean, you're going to still find a way to get it.
The interesting part was they were saying, like, the loyalty of WeChat users like sways toward the app versus the phone. So It's like they were like, we would rather have WeChat than iPhone.
It's a pickle, but at the same token, it's like, I don't think, in the grand scheme of things, I think that Apple's doing a very good job to insulate themselves. And here's some fundamental data that we can look at. So when we look at, say, for example, a company like Apple, 44% of their entire revenue comes from their iPhones. Like, let that sink in. Now, keep in mind, its services business is no slouch, because I think as of recently, they reported, $591 billion just from the App Store alone. And then on top of that, that's not including, say, for example, the other revenues, like, for example, its wearables division. It's also its iPads and MacBooks and iMacs. I mean, those are probably the smaller percentage because, higher costs, and at the same token, less use. But when you think about it, it's like, are you really going to have people leave the Apple ecosystem? And then on top of that, they found a great way to monetize every single iPhone user. Yeah, I don't think that people are just going to leave the Apple ecosystem over WeChat. I mean, let's be real. I mean, we can start this up in the comments. Ask yourself, are you going to leave Apple for Android over a simple app? We'll run this. I wish we could run a poll.
Right.
I wish we could run a poll.
It's kind of a different loyalty, though, right? Like, there's a whole nationalism part tied to it of WeChat users. So
Yeah, but I mean, they're still going to use iPhone. I mean, they're just going to find a way. I mean, think about it. You have folks that try to consistently smuggle iPhones into China all the time. So
We shall see.
I have no problem in coming back and saying that I'm wrong, but I
No,
just,
I'm not saying I think that they will leave. I'm just saying I think it'll be interesting to see how this plays out.
good point. Good point.
And that brings us to that favorite time of the day.
By the way, everybody's saying it.
They're
They're saying nah.
Oh, I see the nose. It's chart time. I saw someone yelling charts in the comments.
Wait, if you guys want charts, go ahead and shoot that up in the chat. By the way, shout out to Earn Your Leisure for hitting us up in the super chat. We love y'all. Thank you.
Okay, so y'all, on Tuesdays we go chart heavy, right? Because we're mainly focused on technicals. Thursdays is more news and fundamentals. And so we thought it'd be cool to take a look at some fundamentals based on our own stock picks. So you can kind of get the behind the scenes as to how one of these companies made it onto the list. So this is the time now to get your pen or whatever you're using to take notes.
Or stylist.
Or stylist. Because we are going to get in behind the scenes. I had 80 jillion messages about fundamentals, how to research. So this episode is for y'all right now. So get ready. So Mark, we had a list of companies. Which company were you gonna go with?
I don't know. I mean, like they're all bangers. So it's like, pick one.
I would like to go with one that has a 52-week high. Like either NVIDIA or Best Buy or you want to look at Best Buy?
Yeah.
Now, see, I've been talking about Best Buy for a minute, and everybody was just like, "Oh, well, that's cute, Mark," but
they're kind of killing it.
Yeah. All right, so let's pull up Best Buy. All right, and then I'm gonna come on through and share my screen, and hopefully you guys can see it. Don't worry, I'm gonna make it enlarged for everyone. All right, so if you scroll to a wonderful place called barchart.com and follow along with me, you see something called fundamentals. Now, Best Buy has been a sleeper company for quite some time now because of the fact that, one, if you think about it, Best Buy was one of the very few stores that was still operational outside your Costco's and your Walmarts and everything else. I mean, it's one of the very few companies that doesn't give you groceries, but at the same token, they still had tons of folks buying. Their online e-commerce is amazing. And on top of that, they switched their business model from 1 hour pickup to now then curbside pickup, which is pretty dope, by the way. They even put it in your trunk. So just for something out there. Now, the thing is that when we look at fundamentals, right? So a lot of things here is like, okay, hey, you look at, say, for example, a lot of things like, for example, their annual income or sales. So they did $43.6 billion in sales. As it pertains to income, $1.5 billion. Shares outstanding. Now, this is an interesting thing that a lot of folks don't really pay attention to. Now, here's the reason why we say pay attention to shares outstanding. Now, of course, I'm going to give you a reference to a different company, but you can kind of put it together. Tesla, whenever you get the chance, go look at the amount of shares outstanding. Now, shares outstanding means exactly what it means. How many shares are left and readily available? Just to put it into perspective, I'm going to quickly touch upon this, but look at the shares outstanding for, say, for example, Apple. About 4.2 billion shares outstanding. All right, so here we have about 257,000 shares outstanding. I think with Tesla's about 184. So that means something. We also look at what is called earnings per share. Now, you typically see earnings per share recorded on, say, for example, earnings. You typically see earnings per share and you typically see revenue. Those are the two things that always stick out to any Wall Street analyst when they're looking at the stock. Now, if we want to go even further, you could do price to earnings, and that's pretty much a ratio, also known as PE ratio. But let's get out of the straight up technicals for it, and let's go a little bit further. If you look at Best Buy here, they've been paying pretty much a steady dividend that's been increasing. If you also look at it in the sense of, for example, the most recent split, they did a 3-2 split back in pretty much August of 2005. And that's really where the stock started to take some significant leaps because they completely changed their business model. If you were in the if you're all about growth and say, for example, how the stock has moved, you can look at it and say, okay, 1 year return, they're up 51% in 12 months. In 3 years, it would have brought you back 76%. And then in 5 years, 247%. So, and then look at the growth over a 5-year span, revenue growth is up 8.8%. Let's see, the earnings growth is up 133% and their dividend is up 177%. Now, typically you pay a dividend when you're profitable. I mean, you do see some terrible companies out there that are paying dividends when they're not profitable, but to me, that doesn't really make sense. You typically pay people the dividend, which is AKA also known as part of the profits. All right, so let's get even further, shall we say, into the weeds. So let's look at what we call earnings. Now, a lot of folks like to look at earnings estimates and everything else, but let's look at it as it pertains to their next earnings release date, which is coming up fairly soon on the 25th. So what the current quarter was as of July, they had it at 0.98, which was an estimate. And then as of next quarter, you can see that it's playing out through the year. You typically add this up throughout the entire period, and then that's how you get your annual estimate. Pretty much the same thing across the board. Now, here's the thing that we look at: growth year over year. Now, you probably hear people talk about this a lot. For example, during COVID-19, a lot of folks expected that companies were going to have no growth, and a lot of companies were going to have negative growth, especially if you were already struggling long before COVID-19 came along. But we're not seeing that happening. And if anything, here, this estimate here is pretty low for Best Buy. Now, a lot of you may say, okay, hey, Mark, we hear you talk about seasonality. Now, here's where it also comes into play when you think about it fundamentally. Every single company has its season, and every industry sector also has its season as well. So, for example, they expect that Best Buy shouldn't have a good quarter during the summer quarters, right? Why? Or during the spring quarters, because honestly, what really happened? Nothing outside of, say, for example, folks graduating or going on spring break. Now, when we look at, say, for example, this quarter, we say, okay, hey, there should be people buying. When we look at the next quarter going into October, we should be seeing people buying going into back to school. Now, I think that this number is going to be huge, and I think that they're going to beat on this earnings because of the fact that if people are still going to school and if education is still taking place, but yet at the same token, they're not in physical locations as it pertains to a school, then this is going to be huge for Best Buy because of the fact that what is it that they sell? Technology. And what is it that those students will need? Technology. So this is going to be huge here. Now, we see it take a slight little dip here as it pertains to fiscal year 2021 in January. But again, it's just following within the trajectory. What we're expecting is that in my analysis, what I'm expecting is that, again, that Best Buy's numbers shouldn't be as bad as the 8.2%. I think that they're going to probably come in around maybe -2, which is a significant beat. And I think that the reason why that's going to happen is because of the fact that you're starting to see a lot of companies that were already good companies, you're starting to see them turn around. And that's major. Now, as we move on to, say, for example, 2022, they're expecting that their year-over-year growth is at 16.5%. I typically leave that be, but if you're playing options, it's a good number. All right, so then when we look at that, now we start to go into news and headlines. So as you can start to see that you're starting to see that, for example, investment banks are starting to become a little bit more bullish on the company. Now, let's go even further, right? Let's go to analyst ratings, because analyst ratings actually matter. This actually tells you what analysts are actually thinking from investment banking or institutional investors. This tells you what they're thinking as it pertains to their ratings on the stock. So if we look back to 3 months ago, it was at a 3.89. Now, 2 months ago, it's at a 4. A month ago, 3.94. And here we are back to currently at a moderate buy. And hence, you could see it as it pertains to the ratings breakdown. 10 we're at hold, 9 we're at hold, 9, and then back to now we're at 8. So that's letting you know that Wall Street is getting more bullish on Best Buy. And these are simple things and just a small taste of what you can use. And using, say, for example, a service like Bar Chart, which is, you're getting all this for free. Notice I'm not logged in here. But if you do want to go even further, there's other great things that they provide you. But if you want to stay with a free model, that's good. The other good part is they show you price targets from those analysts. So this updates and it shows you what the lowest price target is from analysts as well. And that's ultimately some of the simple fundamentals that you can look at when you think about, say, for example, a stock or a company.
Homework alert. Kamari, what do you got for news? Anything related to retail space or Best Buy or outside of that?
Yeah, just kind of along the XLY, in a broader sense, do you have a prediction for what the retail sales data will be that gets released tomorrow for July?
What the retail sales number will be? I still don't think that it's going to be super duper great, but I think that it's not going to be super duper bad either. So I think it's going to be kind of like a meh. I definitely think that it's going to be okay, but it's not going to be anything stellar. Especially since you're going to start noticing that since people are not getting those unemployment checks and with the extra money in the stocking cap quite yet, you're going to start seeing that folks are their sentiment is going to probably decrease in the short term. I think that when we look at what retail sales has done, though, I think that there's been a lot of shopping. I mean, when you look at what people are doing as homeowners, they're buying a lot of stuff at Home Depot. So, I mean, Home Depot, Lowe's. I think that they're going to be stellar because people are going to do a lot of home improvement projects on their home. And when they do that, that increases home value and equity. I think that there's going to be other major players, like, for example, your Best Buys, your Targets of the world that are still alive and kicking, your Walmarts that are still doing their thing, your Costco's. I mean, I don't think that the shopping is going to be like frenzy type at Costco, but from what I've been hearing, it's still at the point where they still are seeing some of the inventory still lost. I think that you still have a ton of folks buying up tech because it's interesting. A good way to see it is try to go buy something and see if it's on back order. That lets you know that supply is pretty much low. I think that when we look at, and like I said, these are things in which that the information is out there. So it's very, very simple for us to just go out there and look at it and find it. And then from there, you just put the information together and you just analyze it. But in my opinion, I think that the data is going to be more like it's not good, not bad, but I mean, I'm just kind of like in between, and I can get over it.
Yeah, so we'll probably, if that is the news that we get, there wouldn't be much market movement related to that.
I think that you're going to still have market movement regardless, because in this market, you have a lot of folks that are out there ready to short sell off of news. And then on top of that, you also have algorithmic trading. For those that don't know what algorithmic trading is, it's pretty much where a lot of investment banks, they use pretty much trade algorithms or pretty much AI to trade on their behalf. And it scours the internet for news or for headlines. And once it has a headline, it automatically makes a move. So when you see the market typically just spike down, that's not people. Those are actual trading algorithms that are actually doing that activity. And the same thing that you see when it spikes, for those in whom which that are into the whole candlestick format of looking at charts, you definitely see that when you see it in large spikes. But I mean, line charts show you the same thing, so it doesn't really matter. But yeah, I think that you're going to see algorithmic trading definitely take a role early on in the market. You're going to see some volatility hit. And then after that, you're going to pretty much see it settle off. And especially on a Friday, I mean, you may see some folks profit take and get prepared for next week's trading.
Gotcha. Jolyn, over to you.
Thanks. All right, so let's talk about some chips and dip now. Because Micron, they had a bleak forecast for memory chip demand. So you know, me, I need to know about these things personally. You know, self-interest. Okay. So let's
So
talk.
now you're beefing with SMH's family members.
Hey, Cookie and them. No, just kidding. But I need to know about Micron though, like, and how that will impact SMH as a whole, and then also.
I think we should go to charts for this one.
Right.
Mhm.
So let's go ahead and go to charts. Let me remove that off of my screen, and we're gonna definitely go check it out under Micron. Now, of course, Micron had a quite bloody day. Now, one of the things to keep in mind about Micron is, let's go to the 5-year. Now, in looking at Micron, I'm going to remove the Bollinger Bands off the chart so that way you can kind of get a glimpse of what it looks like. I mean, hopefully everybody can see this. So if you can't, go ahead and shout us out in the comments and be like, what's good, what's bad. But let's just do a simple comparison, shall we? We're going to take SMH. Notice how there's an inverse there. We're also going to take, say, for example, a company like Qualcomm, because they're pretty much both kind of like in the same space with each other, except Micron deals with the memory, and then Qualcomm deals with more so the communications. And then we're going to take AMD in between. Okay, that's just not fair, so we'll just remove the table. Let's look at Intel. Yeah, we'll look at Intel. All right, so these are typically the companies that are really underperforming the entire SMH, and I'm probably sure that there's more that are in there that are looking a little bit shaky. But notice how I showed you AMD, and over a 5-year span, it's like they just look better. But if we're looking at Micron, right? Micron hasn't really had anything stellar going for it, and especially now that Apple is moving into its own chipset. I mean, that's really taking a huge chunk out of Micron. And then on top of that, you have other suppliers that do what Micron does. Now, will Micron make a comeback? Yes. Will Micron take a huge chunk out of SMH? No. When it's all said and done, where will Micron be? I mean, here we are at the 1-year chart. Again, here's Intel, here's Micron. Intel's pretty much and Micron are getting ready to hit an inverse with each other, but notice Qualcomm is having pretty much a rebound year. So, I mean, it's Micron, y'all. I mean, they provide memory, and honestly, memory is super duper cheap. It's a lot cheaper than the communications. It's a lot cheaper than the actual processing. So, I mean, if I guess another company that I can really compare it against, so that way everybody can get some solace and some perspective. Let's look at Western Digital. We'll make it red so that way. Notice anything?
Dang.
I mean, if we're looking at a year to date, they're pretty much mirroring each other, and they're both within the mirror. So they're both within the memory space.
Where is Micron innovating though?
Huh?
Where are some opportunities for Micron to innovate?
I mean, given the business model and what they are, and keep in mind, when you're a large corporation, it's kind of hard to make a pivot. That's why, you know, when we look at the Kodaks of the world, it's kind of hard to really make it believable. When you're a smaller company, that means that you have a lot more opportunity to make pivots. And I just don't see a pivot for them. I mean, I just don't see a long-term strategy for them. I think the only best thing that they may have that's up their sleeve is the fact that they could potentially be acquired by another company. These two companies, now I have to say, are on the hit list for acquisition or mergers.
All right, what's the timestamp on this? 5:47. Okay.
Now, when I normally call a merger or acquisition, you know, especially that's me putting on my venture capital hat, this looks like the evidence of a potential acquisition play in which that whoever is the acquiring company is going to be buying this company at a significant discount.
Okay, so for SMH, they switch up their holdings daily. I didn't have the opportunity to check today to see if they had reduced.
Oh, you want me to talk about that?
Yeah.
Oh, well, let's do it. Oh, as she sips. Okay, there it is.
I be trying to help y'all out, okay?
Let's go to, we've actually used 3 different sources today. That's pretty cool. So if you journey with me, I'm going to etfdb.com. It's pretty much a database for pretty much any of your ETFs that are out there. And the reason why you want to always, stay in tune to what's happening, I know that this is kind of like blown out, so bear with me for a second. You can go here, and here's the cool part about ETFDB, because it gives you a lot of the understanding, like for example, the fund flows and what's happening over, say, for example, the month, and pretty much that kind of stuff. And it also tells you kind of like its performance. But here's another cool thing that you can see. Now, we've been seeing some huge shakeups here that I want everybody to kind of pay attention to. So Taiwan Semiconductor is just still sitting up top. But if you journey back with us, and I think you'll probably see it in some of our older episodes, Intel was once at the top or at the second place where NVIDIA now stands. And then I think it was probably NVIDIA, then a few other companies, and then you had AMD probably in like 7th, and then actually AMD was probably down here. And I think Qualcomm was also down here. And now you're starting to see a huge shakeup within this space, and it's telling you exactly where exactly is the institution, or where is VanEck, where are they reshaping their fund, and where are they throwing their horses towards. So they're definitely throwing their horses towards NVIDIA. I'm probably sure that they lowered their position in Intel, and I'm probably sure that they're increasing their position in AMD. Now, I don't think that they're doing it super duper heavy. I think that they're also, say, for example, letting the market cap do its thing as well. And we're starting to see that the market cap for between NVIDIA and Intel, NVIDIA has completely overtaken Intel. And with this deal with Softbank, I just believe that it's inevitable for sure. This is going to probably make it now compete against your Taiwan Semiconductor, though that I don't think that it's going to fully overtake Taiwan Semiconductor, because they pretty much do a lot of the massive manufacturing for a lot of these companies that are on this list.
All right. Can you just Kamari?
Yeah, okay. I have a number for you.
Ooh, I like these.
I know.
And I have one clue if you want it. So it's 17 billion.
That's not fair.
With the clue? It's not a good clue either. It's minimal. Google, Amazon, Facebook.
Google, Amazon, Facebook, 17 million?
Billion.
17 billion. I want to say that this has something to do with either AI or something that has to do with TikTok, but I'm gonna have to concede on this one, on the randomization of such numbers.
All right. So this is the amount that the 3 of those companies have invested total in India. So I want to talk a little bit about the investment we're starting to see in India, and just the potential market and the future for what's possible there. Like, we also saw Apple shifted some of their production to India. So just talk a little bit about this potential popping up in the India market.
Okay. Truth telling time. Are we ready?
Yeah, let me get comfortable.
Does everybody want the truth here? let's not act like India doesn't have the most software engineers that come into the United States and they take up most of the H-1B visas to most of your tech companies. First off. Second off, let's also not forget that the United States has also been cutting back on its H-1B visa program, thus cutting off the entry of a lot of folks that are coming over from India. Let's also not forget that also India has one of the best, actually they are the best country that has the #1 computer science school in the world. Think about that. Their computer science program is better than Harvard, MIT, as well as, Cal and Stanford, Carnegie Mellon. Let that sink in for a second. They produce the most amount of engineers. I mean, mostly like you probably have the most amount of engineers per capita in India. And then on top of that, there's so much opportunity because of the fact that, one, it's cheaper to hire folks over in India. Most of your software development shops and firms, their talent is cheaper, though that they provide stellar service and talent. It's cheaper over in India versus paying for American talent. I mean, let's just call it for what it is. It's just cheaper. It's just like, say, for example, when we think about agriculture, it's cheaper to, say, for example, hire immigrants that come into the United States versus hiring Americans to do the labor. So why would these companies be investing $17 billion? Now ask yourself this, how much money would they be investing if this was, say, for example, Europe? How much would they be investing if this was, say, for example, in other parts of Asia, like, for example, Japan, or let's say Montreal, Canada, where, for anybody that doesn't understand, they also have some of the top software engineers and developers that work on video games. It's not rocket science. It's just the fact that you're going to where the talent is cheaper, one, and then two, that that's exactly where the talent is. I mean, think about it. How many engineers do we produce here in the United States? I think we only produce probably maybe about 466,000 a year from college. There's more than 466,000 jobs that are available within the computer science landscape. Simple math.
Dang. Well, there you have it.
So 17 billion is actually quite a steal.
It's a deal, y'all. It's a deal.
I think there was a history of India really not letting foreign companies come into the mix. And so now there's kind of been a little relax of that. And
there's a little bit more westernization that's happening in India, yeah, for sure.
And to my understanding, like there's one major like business mogul who everybody is kind of using as the entry point. So
that's your homework, people. Find out who that business mogul is. All right, gumshoes.
Yo, that show was lit. Where in the world is Carmen Sandiego?
Yes.
All right, so I'm looking through some news. Some things I kind of want to save until we get closer to election season. Kamari, what we were talking about earlier. But I also do want to make an announcement. We have about 4 minutes left, and I want to make an announcement. And the announcement is simply that Tuesdays, y'all, we're moving to 6 p.m. Thursdays will stay at 5 o'clock. Tuesdays will primarily focus on technical, so charts. We got to get y'all, able to read these charts like this, okay? And then Thursdays will be fundamental so that you understand the story that goes behind or with or accompanies the charts. So just keep those two things in mind, okay? And then also, people are asking about these shirts. Mark, do we have an ETA on the shirts?
I think we're at, what is it, a week and a half now?
Okay, all right.
Yeah, we're at a week and a half. We have to put it through Teespring, and Teespring is hating because of the resolution. So we've been going through that, but like I said, they look dope. And like I said, there's always a gym within a gym, just as a hint.
Okay, all right.
All right, so
in our last final moments,
yeah,
go for it.
I just want to say this for folks in whom which that are like consistently coming to us to look for specific trades. That's not our duty to do that. Our duty is to give you the education and the tools so that way you can go out there and fish for yourself. It's like we are not doing you any justice by just telling you any trades in which that you should do, or say, for example, just saying, hey, here's a trade that you should do. Now, every now and then we may drop a gem because of the fact that we want to do it for the culture. But for the most part, we want you guys to learn and also to gain the perspective so that way you can go out there and start fishing for yourselves. That's the first thing. The second thing is, I think we got some questions about puts.
Oh, a lot of questions about puts.
I guess the biggest question that I was being asked about when it comes to puts, and I'll do a quick little screen share here for that one. Give me one quick second. So for folks that want to know, how is it that YouTube? Great. Finance. So if we go to finance.yahoo, and let's pull up a company like, let's look at Teledot. So a lot of you are asking, how is it that you can find, say, for example, a put? Now, of course, now this stock is essentially rebounding. So let's see if we can find something else. Let's look at a Boeing. There's always something there for a Boeing.
I told you Boeing charts have so many lessons.
There's so many levels within Boeing. All right. So if you think about it, how is it that you're able to find a put? Excuse me. All right. So currently Boeing is currently trading within a mid-range of, let's say, let's remove the Western Digital. It's trading around the 170s. Now notice it's been toiling through this sector for quite some time. If we go to a 6-month, I mean, 170 has been kind of like the peak point. Now notice the next line that it has to break above is the 180 marker for it to even show any signs of life. But it's kind of still trending downward. If we look at, say, for example, this 1 month, it's trending downward. So simple investment would say, okay, look at the 170 as the next level of support. You can easily track the levels of support. So first level and second level of support to be able to find, say, for example, where your position is as a put. Now, when you're playing, say, for example, a long-term position, like let's say, for example, you're playing an XLK. Now, if you can look at this chart with me over, say, for example, a 6-month period, you know, where would be the first level of support? Is it here or is it here? If you guessed here at the 111, then that's correct. If you said that it's at 109, that's incorrect. That's the range. So the level of support is between 111 and 109. The next level is down here at 105, where we double bottom. So really it becomes very, very simplistic when it comes to picking out put prices. Now, if you're playing long-term puts, which I don't understand why you would, maybe that's a little bit different. But at the same token, you can still use the chart to literally plot where your puts will go. And of course, within reality. But for the most part, you don't really need to go by that simple same formula to find out where your puts are. You use the charts and use the fundamental knowledge and data that you have here that's right in front of you to be able to plot where the put is.
All right, you just cleared about 20 questions out of my inbox.
Yeah, I mean, I always say, like, you know, simple things. Keep it simple, keep it stupid. So when we say keep it simple, stupid, don't try to overthink it. Don't try to overanalyze it. It's very, very simplistic when you just look at the chart and then know where the support lines are for both the first and second level. Now, if you want to cheat, and if you don't want to do all the extra work, there is a website that we've been talking about for a very, very long time where there is an opinion section that's based out of data. If you can find that site, that is your homework, because then therein, it will produce some great magic for you and show you where those support levels are and where those resistance levels are.
I'd highly recommend doing it by hand first, like learning just how to look at the chart and find
100%.
Yeah, first, and then if you want to, shortcut, then go to that site, which was already mentioned Y'all know what it is. I see someone writing in the comments. Shout out to Vanessa.
Yes, Vanessa, she be on it. That's what I'm talking about. The squad is here. Gotham, the city, the people of Gotham are here.
So, there was something I was gonna say that you made me think about. Now this thought has just escaped me.
Oh no.
But yeah, it just escaped me, and it was really good too. It'll come back. But this is I think it's been a month now. We've been here for a month. Well, on
We've
YouTube.
been on YouTube for almost, it'll be a month on the 21st that we've been on YouTube.
That's wild. A whole month, y'all.
I just want to each and every single one of you, thank you. I mean, I just want to say thank you. Like, honestly, a lot of you guys send me thank yous, and I'm going to be real with you, just having a real moment with each and every single one of you. I'm nervous every single time I do a live video segment. And the reason why I'm nervous is not because of the fact that I don't know the material, but within the hour of time or whatever it is that I dedicate towards providing, this content, as well as us putting these shows together for each and every single one of you, is like, we are so nervous because of the fact that we want to make sure that you walk away from each session, you have value. And when we mean by value, we talk about value of your time per hour. Hint, hint for some folks that need to go back and watch another episode. We want to make sure that we're giving you that value of where we place ourselves. We're making sure that we're giving that to you. So that way you're saying, okay, hey, I've stumbled upon gold, and this is something in which that I can carry on into the next thing. And so we really, really care about making sure that each and every single one of you have the opportunity to not only learn this, but to build a solid financial future, and possibly be able to have the privilege to say, hey, I do work this job, but now I work this job based upon out of choice versus, say, for example, out of necessity.
Yeah.
So yeah, that's
y'all know who's working on a second retirement now. I told her, I am trying to chill. I do not want to work. Okay.
All right, so wait, let's talk about what you guys got going on. Like, how are you guys going to end the week? And last thoughts for you two, and then I'll give my final thought.
All right, go ahead, Kamari. I'll let you go.
I'm ending the week and just study. Like, I've been working all week, so everything I do is after work. So I'm Friday's my study day.
Nice. Jolyn?
Well, I'm going to the zoo. Random, I know.
How do you socially distance at the, never mind.
Anyway, like I said, I'm going to the zoo.
Okay.
This is gonna be hot. I gotta do something. My cousin invited me to the zoo. I'm gonna go to the zoo. But as far as the stocks go, I'm really just going to just be watching. I'll be checking in with the market. I usually wake up a little bit before the market and see what the landscape's looking like, check out the pre-market, activity, and then listen to some commentary, and just FaceTime Mark.
I was gonna say, hit me up.
Yeah, FaceTime Mark. Talk, about what's going on. But as far as like making moves, I'm not making any moves. I'm pretty satisfied with how things are shaping up. I'm on my way to hitting my stretch goal, which is supposed to be for the end of the year. I'm almost there. We still got hella time left. So that's exciting. And I'm also excited because XLY is clowning in my account, y'all. I mean, straight clowning. I'm over 1,000% just on XLY. Okay. SMH is holding steady. I couldn't ask for more. They're holding steady. But I am going to start, we're going to have a conversation about expectations in the relationship, because I'm just like, yo, I know my worth. So that's what's what.
All right, so here's what I got going on. I mean, you guys know me. I try to do the Dark Knight thing throughout, Monday through Friday. But shocker to the people of Gotham, Batman will not be available on Saturday and Sunday, because I will be celebrating my 5th year anniversary with my wife. So I will be, pretty much disappearing, fading to black into the shadows. So you will not see me. And ultimately, I will try to get back to you guys on Monday to definitely make sure that, hey, provide you guys some value. But I may be making a few purchases on Friday in this market, if not preparing for Monday.
All right. I think I'm on the Kamari train. I'm gonna be preparing to see what.
It's definitely a prepare week. It's definitely a prepare week. Well, thank you to each and every single one of you for joining us. Thank you also for the congrats that I'm seeing there in the comment section. You know, I greatly appreciate it. It's been 5 solid years with my wife. And on top of that, Jolene, we're going to be reaching our 1-year marker. I think, I don't know when, we'll figure it out, but we'll be reaching it as it pertains to what we've been doing on the come up. And I mean, honestly, this is dope. So thank you for rocking with us. Until next time, we will see you guys on Tuesday at 6 o'clock p.m.
Yes.
Pacific Standard Time and 9 o'clock p.m. Eastern Time. If you're not able to be there with us, we understand, we get it, but you know, we just make sure that we want to make sure that everybody has the opportunity to check out Trap because he provides some awesome fundamental information for everybody. And then you can come on over to the come up and then we get to play with charts. So, I mean, you get the best of both worlds. But until next time, I'm Mark Monroe.
JolynGC and the place to be.
And I'm Kamari Bright.
And this has been your come up. We'll see you guys next week. And I may see you in the come up after hours on Instagram. Bye, guys.
Bye.